Good afternoon, everyone that's just joined. We'll just give it a couple of minutes or a minute or so just to see if we have anyone else join the meeting. If I could ask if you could all keep yourself muted throughout, that would be great, just to stop any interference. So we'll give it another minute and then we'll get going. Sorry, my camera wasn't on. We'll give it another minute and then we'll get going.
It's coincidentally, it's about how long I'll be speaking for, I think.
Just to let you all know as well, I have started recording this.
Just while we're waiting for the others to come on, if you've got any tax questions at all on any subject, we may be able to find some space for that today. The actual content in the spring statement is limited, shall we say.
Right, John, you've been spotlighted.
Spotlighted, what does that mean?
Yeah. I think we'll get going. So welcome everyone to the spring statement summary. I'll hand you over to John, who's got a riveting summary for you. Yeah, this is John O'Shea, the Haslers chairman, so I'll pass you over. As I say, if you could keep yourself muted throughout. If you have got any questions, please feel free just to pop in the chat, and we'll take them throughout, basically. Over to you, John.
Thank you, Charlotte, and good afternoon, everyone. If you've joined, I'm impressed, especially if you've already heard the speech today. We normally speculate before these things about, there's actually a betting market, believe it or not, on the length of the speeches. And there's a new one that I saw the other day. I can't remember which site it was, where you could actually gamble on whether he used a particular phrase or word during his speech as well. And to be honest, that's probably about the most exciting thing you could say about the spring statement, which was sort of, I don't know, I guess it's about episode 4 of Rishi Sunak wants to be Prime Minister, as opposed to a spring statement. It's very much all about himself. The actual content, which we'll come on to in a moment, was fairly limited. And it seems to be like a new style developing, especially with Rishi, whereby he sort of promises lots of good stuff and then doesn't give any detail whatsoever, and promises good things in the future. And one of those good things we'll come on to. But I think what seems fairly clear now is we've got a latest possible date for the next election. It certainly won't be any later than May 24, I guarantee that, and I suspect it will be before that now from what he has said. So what has he actually changed today? Well, we start with a background where there's a lot of speculation the last couple of days that it was going to be a huge giveaway because government borrowing this year is substantially under the forecasts that would actually only released back in October 21. And we're going to undershoot the amount that the country needs to borrow this month by perhaps as much as 30 billion. And in fact, that figure would be a lot higher were it not for the interest rate increase, because the only number that they forecast that's gone up in terms of expenditure is debt interest, and the interest on UK government debt now stands at a whopping 80 billion plus. Just as a little reminder, always makes me laugh when you say these figures. Total government debt at the moment is over £2.6 trillion, which is a staggering £40,000 for every man, woman and child in the country, just to put that into perspective. Now, if you cut it down even more to, well, it's only taxpayers that really got to pay that back, it comes to a staggering £75,000 per head. So you can see that getting the finances back under control, which was a phrase he uses many times, is pretty important these days. So you think with that 30 billion spare, he was going to throw the cash around and woo everyone. And well, he's thrown a little bit of cash around, and it's surprising how quickly these numbers add up. The cost of living crisis featured very heavily, obviously, in his speech, and most people are crying these days when they go to the petrol station to fill up their car, and that was the area that he started with. And he's now cut fuel duty from, I think it was 6 p.m. tonight, which should pretty much guarantee all the forecourts are empty at this particular time, by 5 pence a litre, which, you say 5p a litre never sounds very much, but to put that in perspective, that's a cut of around about £2.4 billion in government revenue. He hasn't made it a permanent cut, but he's made it a cut for a 12-month period of time, so it will run through to March 23. One presumes it will come back to the current level at that point. And it's worth just taking a note here that the total amount the government get from fuel and excise duty now is a whopping £37 billion a year. And that is something of concern to the government, actually, because somewhere along the line, the method and the way that they tax this to protect that revenue is going to have to change. As more and more electric vehicles come onto the market, there will be less and less petrol sold. And at some point, they will have to change the way in which that is done. But for the time being, 5p a litre off from 6 p.m. tonight, and it will be that way for about a year. Of course, the other advantage that they get with fuel when the price of the actual commodity itself goes up is that they don't just get the extra fuel duty coming in, but they get extra VAT on it as well, because if the price goes up, so does the VAT element, and that increases VAT revenues as well. And that's probably one of the factors they've taken into account when working out what they can give away, because in reality, 5p off per litre with the increase in costs and the increase in VAT probably doesn't dent their revenues too much at all, actually. So that was his big announcement at the beginning. And then he moved into, I think, what you would call his waffle stage, when he went on for about 10 minutes about all the stuff that he's already done. So all the good stuff that has happened over the last couple of years that he's done to help, he says, with cost of fuel and cost of heating and gas, electric, all that sort of stuff. He just regurgitated all of those facts. So there was nothing new there at all. And then he moved on to announcing what he called his tax plan, which sounded very exciting. We got very excited at that point. I thought, yeah, here we go. Well, lots of changes coming in the tax world, and we'll have a fantastic lecture this afternoon talking about it. So I printed off the tax plan. I've got it here, actually. I don't know if you can see me on screen. There it is. So it's Rishi's tax plan. It's 12 pages long. The first 2 pages are blank. I think even they were struggling to turn it into something of a document. I don't know when it becomes a document and not a booklet, if it was probably didn't have enough content. But there really isn't an awful lot in it. His big opening thing, of course, I'm sure you've all heard about it now, is the cut to national insurance. And this is in the background of the increase that is coming from April 22, where we've got an extra 1.25% being paid by both employees and also employers, and also self-employed, and also those in recipient of dividends. So it hits in all ways. This year it's national insurance. Next year it will be called the Health and Social Care Levy. But that is 1.25%. That applies from 6th of April, and lots of people were saying that should either be abolished or deferred or put off or whatever. And he quite clearly said, nope, not going to do that. We need that money to fund the long-term healthcare in this country, and that is something they're going to stick with. So no change there. But to offset it, and he built this up in typically Sunak style, almost like he was sort of in a movie, really, or at least thinking that he was. There is an automatic rise that happens each year in the national insurance or lower threshold. Prior to this budget, it was at £9,568. With inflation, which was measured back in September 21, that would have risen by about £300 this year. And then he pulls out the bag that he's putting it all the way up to the personal allowance. That's an increase of £3,000 in the lower limit for national insurance. And that is equivalent of a national insurance cut of £330 for everyone who earns over the personal allowance. A little bit less if you're under that, but a fairly substantial rise, cut, you should say, which amounts to about 30 odd quid a month. How far that will go these days, who knows? But that actually costs a whopping £6.25 billion in terms of revenue to the country. And that's just the sheer number of people, obviously, that applies to. Strangely, and I haven't quite worked out why, you might think that would come in from 6th April 22, that being the start of the tax year. But for reasons which I haven't quite worked out yet, he's decided, or he's unable to bring it forward other than from July this year. So we're going to start the tax year with the automatic increase, which was the £300 one, for April, May and June. And then when we get to July, the new limit will come in and the national insurance cut will start to be seen in pay packets, etc. So some complications there in terms of the calculation. What does it mean? What are the other consequences? Up until obviously this change, we have two levels of national insurance, one called primary, one called secondary. Primary applies to the employees and secondary applies to the employers, and you effectively pay your national insurance rate above that figure. That figure, as I said last time, is 9,568. Will from July go up to 12,570, but it would seem that is only for the employees. There is nowhere written yet, or that I've seen, and I've not seen counter confirmation either, that is changing from the secondary level. So in other words, employers, I think, are still going to be paying national insurance based on the new lower rate, which is the 9,568 plus, I presume, the inflationary increase of £300. So for the first time in a while, there is potentially going to be a difference between the level at which the national insurance kicks in, depending on whether you're an employee or an employer. And this can cause some further confusion, because it means that we start thinking about these things. If you know, those on modest salaries, perhaps spouses or something like that, salary levels are generally set that an individual can get their credit towards their state pension but not pay national insurance. With the change from the lower rate of 9,568 up to the personal allowance, potentially that puts some people into a situation where their salary may not now count at a level towards state pension credits. And that's something, again, there's nothing written on that yet, albeit it's only been a couple of hours. That is definitely something to look out for. And you would think, okay, well, the obvious answer to that then is to put all spouses' salaries up to £12,500. That might be the case, but that will kick in potentially additional national insurance, because it doesn't look like the new rate applies to secondary national insurance contributions. So if you thought you were smart by putting the salary up by the £3,000 increase for national insurance, you could actually be creating a liability of £400 being 13.8%. That's before the new 1.25% comes in. So it's something just to be cautious of before people rush off to put up salaries at that sort of level to get the benefit of this national insurance cut. It could actually be a bit of a kicker there, that you could end up paying more national insurance as a result of it, even after the cut to the individuals. So it's just something to be wary of. As soon as we've got a bit more detail on that, we'll obviously let people know. But as all things, it's never quite as simple as you first think. So that was the national insurance. That was very exciting. At least Rishi Sunak thought it was very exciting. What else did he say in the tax plan? Well, there was a lot of promises about the future, really. He spoke for quite a while about research and development and investment from a business point of view in the UK, and he made comparisons to other countries in the OECD, and he mentioned America in particular, and that our rate of investment and training and such like is lower than most OECD countries, and that's something that he wants to address. And in his tax plan, he says the government is investing £600 billion over the next 5 years. We want businesses to invest more too. I'm not quite sure what he's invested in £600 billion in. I'm not aware that the government generally invests in businesses on our behalf. I'm assuming that is something to do with how they're costing out the tax system in that respect. But all we know at the moment, we've got the super deduction, which runs through to the end of March 23, which I'm sure you won't be forgetting is when the new rate of corporation tax comes in. All he has said at this moment in time, he says, we are going to cut and reform taxes on business investment. We want to build on the momentum of the super deduction to drive business investment. Which is a bit like saying, I haven't got a clue what we're going to do. We're definitely going to do something, and it will sound really good. They say they're going to consult with businesses, but the reality is that sounds like they've got something fairly major planned in terms of the change in tax rules, maybe change the way capital allowances are constructed in some way. For them to say nothing at all at this point would suggest that they've got something fairly major tucked up their sleeve yet. But we're not going to find out about that until the budget later in the year. So that'll be probably October, November this year. We'll find out some more details of that. Hopefully they'll put out some sort of consultation documents or similar in the meantime. So that's what he said about business side of it. He then spoke also on research and development. And again, he threw a few figures around, which again, I don't quite understand how he says the government is doing this, but he says this is why the government is taking what it spends on research and development to a new level. We will spend 20 billion a year by 2024, an increase of 5 billion. Again, I don't really know if he's talking about government investing in projects there, maybe the new spaceport they're talking about or similar. It's got absolutely nothing to do with the R&D tax credits at all. Again, he's alluded to some changes in the future, and he threw out a few buzzwords like cloud computing and refocusing relief and all that sort of stuff. But the reality is, again, there's absolutely no detail in this spring statement at all, other than the fact they said they will, in the budget, bring in some new rules centred around research and development. He did talk about potentially the amount or the percentage of the credit going up, but again, no actual details. But it's an area that obviously is, going to be in focus again in the budget, October, November, later in the year. And R&D is one of those things. It's where it's genuinely claimed, it's obviously a fantastic relief. You end up getting effectively more tax relief than you would pound for pound. That's great, but there are a lot of providers out there in the market that worry us, quite frankly, that are not set up as accountants, because they're not accountants. They're just jumping on the bandwagon, as happens from time to time on these sort of tax things. And we've certainly seen some clients get involved in claims that perhaps don't exactly follow the rules, shall we say. And that's just something to be very careful about. As reliefs go up in terms of the tax costs to the revenue, it's going to be an area that they're much more interested in checking. And the way it works with the self-assessment system, no different to personal tax returns. You get a query on your tax return 2-3 years after the event. And these providers might not be around in 2 or 3 years' time. So if you need some R&D advice, please do come and speak to us. We've got an expert, I'm sure he's on the call here somewhere, Peter Cross, who's dealt with many claims very successfully. So that's R&D. It's good at the moment, but apparently it's going to get better. And then the last thing he did is sort of pulling this, what he thought is the rabbit out of the hat. He spoke about the income tax rates and the fact that, in fact, in the last 2 decades, the rate has only actually gone down twice in that period of time. And everyone thought he was about to cut tax instantly, which would have been fantastic. And he certainly had, in my opinion, enough wiggle room to do that. A cut of 1p in income tax, to put it in perspective, generally costs at the moment around about 5 billion to the government. So actually less than the national insurance cost. And he did say that. He said, I'm going to cut tax from 20% to 19%. but not until April 24. I mean, it's over 2 years away. And in that period of time, don't forget, all of the allowances and the rate bands have been frozen through to the end of the current Parliament, which is coincidentally also 24-25. So whilst there will be a cut in income tax at that point, which could be worth up to, you know, at the top level, I'm just trying to work that out in my head, it's about £370 at the top level for a taxpayer. The cost of living at the moment, inflation is at the latest figure 6.2%. They said it was going to average 7.4 for the year, but will in actual fact peak at 8.7% in the back end of this year. By the time we've had a bit of inflation for a couple of years, we're still very much in real costs going to be behind the game, unfortunately. But we shouldn't sneeze at it. It is a tax cut. We know it's coming, but it's some way off yet. And I suppose if I was cynical, which I am when it comes to politicians, putting it out there now gives them the opportunity, if they want to run for an early election, to bring that forward a year at some point. And maybe that's what they got in mind. That wouldn't surprise me, actually. And that, God, unbelievably, God, 22 minutes, quite impressed with myself there. Bearing in mind, I thought that'd take about 30 seconds. Those really were the main things that were spoken about. There was some other stuff that really was, as I said, just regurgitation of previous information. The only other thing that he spoke about was this household support fund, which previously had been at 500 million, and he was throwing another 400 million at. And I have to admit, I had no clue what he was talking about, but I've since Googled it, and it's a fund that they pay directly to local councils. So to give you an idea, as an example, Essex Council, they got 9.3 million allocated under this fund in the last year. Put that in perspective, 1.84 million people live in Essex. It's about £5 each. And it is a fund whereby if you're on benefits or very low income, you can apply to the local council with some help towards bills for like white goods and stuff like that. So again, it's not really going to change an awful lot, but it shows you the fact that he was majoring on that in his speech, how little content there was really. So that is it. Spring statement has come and gone. It's not the most exciting one that we've ever seen, that's for sure. But we've got, as ever, a little bit of complication to work out, especially on this national insurance cut coming midway during the tax year. Not quite certain at the moment whether that is just the employees or the employer as well. We suspect the employer bit isn't relevant. The only good news for the employers on that was the employment allowance going up from 4,000 to 5,000. But again, being cynical, you know, at the same time that's going up, so is national insurance. Is it really a cut of any sort to an employer? It only applies if your secondary national insurance bill, that's the employer's liability, is less than 100,000. So if the rate is going up, the number of people eligible for that employment allowance is going down because it's based on salary levels. So it's probably barely offsetting the actual increase of the 1.25%. But again, not to be sneezed at, I suppose. So there we go. If anyone can think of a question related to any of that. Oh, no, I did forget one thing. There was a VAT cut, wasn't there? Deborah, there was a VAT cut. There was a VAT cut on green energy installation, effectively, which will cost the government a whopping £60 million a year, according to their figures, which basically means if you're going to install solar panels or anything like that at home, they're going to be a little bit cheaper. Or if you want to set up a wind farm or something like that, if there's anyone in the market for that, then that will be a little bit cheaper. But that the fact it only costs the government 60 million would suggest that's not a particularly big market. Someone asked me a question, please. Doesn't have to be related to the spring statement or tax. If you are asking a question, you're all on mute, by the way. So.
No, I don't think we've got any questions.
I'm not surprised.
That's the first.
Normally Pamboss comes on and asks me a difficult one.
I know. I mean, we will send you just a little thank you email after this. So if anything does pop to your mind and you do want to respond and ask a question, by all means, just reply to that email, and then we can take any questions from there.
We are hopeful the next one, the budget later in the year, might actually be some content. I've got a feeling it might be a big one actually. So stay tuned, say so.
Well, thank you for coming, everyone, and we hope you found it beneficial. Have a lovely evening. Bye.
Thank you.
Thank you, John.